Hey, what's going on, investors? Nvidia just recently announced another record-breaking quarter. What else is new, right? They had record sales, they had positive outlook, yet the stock price dropped over 7% after earnings, which is its largest one-day drop in nearly a year. We're going to cover exactly what's happening and summarize this fantastic earnings report. Just make sure you smash that like button for the algorithm and make sure that you're subscribed. So a quick refresher on what Nvidia is. They are a huge technology company making graphics processing units, or GPUs, for the ever so growing gaming industry. They make semiconductor chips, which are used in basically all of our electronics. They're involved in the artificial intelligence game, they fuel the power behind cryptocurrency mining, and their technology is found in many cars, robots, data centers, etc. So for their actual earnings, Nvidia brought in $7.6 billion for their fiscal year fourth quarter. That beat the street estimate of $7.4 billion. Overall, that's up 53% year over year. We can see here their biggest market platforms are in gaming and data centers at about $3.3 billion each. What's interesting is that their automotive segment actually went down in what was otherwise a sea of amazing growth. This is partly due to major supply chain issues, especially with cars. Now, their gross margins are 67%, which is absolutely insane. This is the power of tech companies. Remember, the higher this number is, the better. That's more capital the company retains, which it can funnel into other parts of the business. Nvidia also announced a partnership with Jaguar Land Rover Automotive. Starting in 2025, all new Jaguar and Land Rover vehicles will use Nvidia's next-gen automated driving systems that comes with AI-enabled software and services from the Nvidia Drive platform. Nvidia Drive had previously been announced as partnering up with Mercedes-Benz as well as the Chinese car companies NIO and XPeng. So some pretty exciting news here. We can see that they are really diversifying their revenue streams, and this is much more than the just gaming company that they once were. So even though the automotive segment actually declined this past quarter, this is definitely a segment I see continuing to grow in the future as we continue to make that switch to autonomous vehicles. Nvidia's AI continues to impress. For the third straight year, they are the industry leaders by benchmark statistics. They have partners like Microsoft, where they are able to showcase the power of their AI workloads in computer vision, natural language processing, recommendation systems, reinforcement learning, and detection. Their performance gains have over 20x in the past 3 years, and their AI is being chased after by some of the world's most technologically advanced companies, including Facebook. Yeah, definitely never going to be calling them by their other name. Unfortunately, some bad news is that their ARM acquisition that was pending since September of 2020 has officially been terminated. This would have given Nvidia access to ARM's high-end performance CPUs to enter new markets, but they just could not get regulator approval worldwide. Many feared that this would create an unfair monopoly. Still, it seems like Nvidia is working with ARM in a partnership for accelerated computing using an ARM-based CPU and having a 20-year architectural license to ARM's intellectual property. Now, I know I might be using a lot more technical terms since this is a technology company, but overall, we just need to know how to make money from Nvidia. Just know, long story short, they're going to be making money and they're going to be constantly developing ways to make more money with their technology. But Nvidia still trades at a ridiculous 60 PE ratio even after its recent slump. Now, you definitely have to pay a premium to get high quality stocks like Nvidia. So even with all the growth that we talked about with Nvidia, a lot of that has already been baked into the share price. There's only so many quarter after quarters that Nvidia can boast double-digit growth that will eventually taper off. Nvidia gave guidance of 11% rise in revenue. Now, that's still great, but that's a far cry from the 61% that they had in 2021. This could be part of the reason why investors sold out recently. It's now trading slightly above its 200-day moving average of 231 and below its 50-day moving average of 262. But with a beta of 1.38, expect a lot of volatility with this high flyer. Now, certain recent global conflicts will have the whole market in a frenzy. But know that these type of reactions have happened all the time throughout history, but clearly we never learn from history. Overall, every time I evaluate Nvidia, I'm reminded why I love this company and why it's the largest position in my personal portfolio. Analysts also love the stock with 26 strong buy or buy ratings and 0 sell ratings. Its consensus price target of $339 would give it around a 40% upside from the share price today. Nvidia just has a hand in all these growing business trends. We just saw Microsoft acquire Activision Blizzard for $70 billion, so there's obviously a huge demand for gaming. We know data centers and all the data and servers that they store, that's not going away anytime soon. Autonomous cars are the future, and Nvidia will power that transition with its technology. Omniverse, metaverse, whatever you want to call these creepy 3D simulations of the virtual world, there will certainly be demand for that somewhere. Now, Nvidia's Investor Day will be on March 22nd, so expect them to be announcing even more new products that they will be bringing to the market. Now, I make videos like this all the time. Please hit that like button and consider subscribing to help out a small-time YouTuber. I'd love to hear what you have to say about Nvidia stock in the comments below. As always, my videos are found in podcast form under the Collect Cash podcast name, still found on Spotify these days, and I will buy, stash, and collect cash you later.